I was trying to figure out a way to record this with like a little corner box of me in the screen, but I guess that doesn't matter. But anyways, on this episode today of the Five Eye Visions channel, I wanted to give a pretty decent layman's what's it called, layman's terms or layman's definition about like what assets are and kind of what they mean, what they should mean to Black people, why we need them, and a bit more other things than that. So again, this is all layman's because I'm really just regurgitating information I got from other people. Still a lot of things I don't know, but hopefully I'm at the point where I can get the basics across. So let's start it off with assets in general. Okay, so let's look up what is a financial asset. Investopedia. Never heard of that. Okay. A financial asset is a liquid asset that gets its value from a contractual right or ownership claim. Cash, stocks, bonds, mutual funds, and bank deposits are all examples of financial assets. Unlike land, property, commodities, and other tangible physical assets, financial assets do not necessarily have inherent physical worth or even a physical form. Rather, their value reflects factors of supply and demand in the marketplace in which they trade, as well as the degree of risk they carry. And also, what's a liquid asset? Let's get into that a little bit. A liquid asset is the asset that can be easily converted to cash in a short amount of time. That's all you need to know about that one. So yeah, basically, financial assets are assets that can basically they can be you can sell them pretty shortly, pretty quickly. And let's see. And a thing you need to really pay attention to here, they do not necessarily have an inherent physical worth or even a physical form. So that's why Bitcoin, for example, can be an asset. I don't know if it's officially considered an asset, but I like to consider it an asset because it's basically getting to that point right now. I think Bitcoin's at like 13,400. Probably dropped because of the traders. But let me look right now. 13,390. That shit's an asset. And importantly, does not necessarily have inherent physical worth. And look at cash. All right. So now that we know what a financial asset is, why is it important for Black people to obtain as many assets as they can with whatever they can? Well, see, the key thing about an asset is the fact that it does have worth. We live, humans, right? Well, not just humans. Every animal, every being on this planet has something it can consider valuable. Some beings consider spit valuable. Some beings consider just reproducing valuable. Having a certain plumage valuable. Having territory. There are a lot of animals where territory is valuable. Having mates, they consider that valuable. Pebbles are valuable. Stockpiles of meat. Pretty much every animal considers any form of nourishment it takes valuable. So value is something that's basically intrinsic to every pretty much every living species on this planet, even to the degree of single-celled organisms, because when they split and reproduce, I mean, that's their value. They find value in replicating themselves. And so that's inherent. So there's always something you will find valuable, right? But the thing about assets is their value can be traded, and their value can be, if you take the proper steps and proper risk management and you make the proper moves, then you can use your assets to increase your net worth. And it's really important for Black people to have assets because we don't have much net worth in the first place. So now what I have to get onto is cash in the first place. Now cash is an asset, and the best thing about cash when you have American dollars is the fact that we're the world's reserve currency. Our dollars are stronger than pretty much most dollars, and even the British pound. Because I know you may look and see that the British pound and I guess the euros, the number is like higher than a dollar, like the dollar. So something's like £20, it may cost $30, but our dollar gets more and is more coveted than those dollars. The issue with cash is this. This is probably, I'm definitely going to buy this visualization. This right here lets you know all you need to know about your American dollar. This is all you need. When I try to get people to buy Bitcoin, not necessarily crypto, but Bitcoin and Ethereum, I need to show them this chart. Because people need to realize, black people, you gotta realize your dollars don't mean much at all. They can buy you a lot of shiny things, but unless you're really using them to get some assets that are either going to hold value or going to increase in value, you need to really think about just like what is your dollar worth and what you're worth. Let's look here. See, this is basically what the purchasing power of $100. So this is like, let's say they go back to 1913 for a reason. This is basically like let's just think about this as max capacity. This is like the almighty dollar, super powerful. $100, God, what could you get in 1913 with $100? Shit, you can get a car, maybe. I don't know. Like, oh man, you could start your own business with $100. I mean, you can start a business with $100 now, but back then it's like you could probably get a whole crate of freaking fruit, and you could sell that fruit for like 5 cents to people, and you'd have so much fruit you'd end up with like $120. And 120 definitely, man, that goes even further than 100 for back then. But this is the key thing here to me. When the Federal Reserve was created. Now, I love how, like, see, they try to trick you into thinking it's a government run organization, right? Like, because it's like United States Federal Reserve. You got the shield, you got the eagle, all that. That is a private institution. That is a private bank, okay? That's a bank. Now, think about it. This bank has been created, right? And America is basically the government saying, you guys give us money. You guys are the ones printing the money. Now, that's a bad idea in the first place, because you're essentially giving a bank control of your country. And there's a reason for that. Now, you got to look at this. This is the main reason why the dollar is not worth anything and why the Federal Reserve is an evil organization. When they were created, literally not even 10 years later, the dollar value dropped significantly. It went down straight 50%. Straight 50%. There's a reason why, like, most states really should have their own banks governing them for, like, the most part. It's because just look at this. Like, when the United States turned over their power, they basically gave their purchasing power away. That's essentially what happened, because they also gave their printing power away to an organization that's able to really do its own thing. 50% drop, not even 10 years later. Now, there was some recovery, and this is why this time period, y'all, is called the Roaring 20s, okay? Because during this time, there was a lot of expansion in America, a lot of globalization, industrialization. We were making all kinds of things. We were making cars. We were making, our military was getting stronger. We were making a lot of weapons. We were still also obtaining states even through this time. We like Hawaii and stuff like that, Alaska. We kept obtaining states up until I think like the 50s and stuff. So also we were expanding our land masses through these periods. And then Wall Street happened. I mean, not Wall Street. what 1929 happened. But still, look here though. The purchasing power of the dollar did still increase, which is kind of crazy to me. And I would guess that the reason is because everyone jumped immediately out of stocks, stayed out of stocks for a while, and just kept stuck with their cash. Because during the Great Recession, the more cash you had, with a lot of vendors selling things at considerably cheaper prices because they had no choice, the more cash you had with the prices going down, well, it's like a law of supply and demand. There was a demand for cash, but with people keeping their cash, the supply really isn't there. And the thing about cash also is during these times, up until the 70s, your cash was still backed by gold as well. So that made dollars even technically more scarce, because you had to have a certain amount of gold tied back to the dollar. So if you didn't really have that gold, you couldn't really make that dollar. And then we have here the Bretton Woods Agreement. And again, layman terms video. I think that's when it was decided that the U.S. dollar was going to be the world reserve currency. And this is when I think gold was basically centered at about $35 per ounce. And ironically, the value started to fall deeper and deeper and deeper and deeper and deeper and deeper and deeper throughout these times. And I would have to assume that, if you consider it, basically with the dollar being tied to gold right right? The more gold you have, it's basically the more dollars you have anyway. So having gold is just more valuable than really having a dollar. And another thing is with inflation and the Federal Reserve and its printing, there is basically a whole bunch of manipulation going on. Because if you really consider it, if we have our money tied to gold, then our money really should stabilize. It really shouldn't be losing value like this. It should have periods of time where maybe the value is down through a lot of global economic factors, but it should be maintained mainly straight, depending on what happens with gold. But see here, this I should assume this is around 1971. I'd say we have a drop comparable to this. It's just stretched out much longer, but we got taken off the gold reserve because America basically didn't have enough gold to print the amount of money that they needed to support the Vietnam War. And actually, now that I think about it, yes, that's exactly why we see this dip. Because for the most part, it does dip considerably a bit, because you also got to remember there was World War II going on. America was getting involved, because I could assume around this time, that's when Pearl Harbor happened. America got involved, had to spend a crap load of money. The whole world was going broke. So it's not like anyone was even able to afford these dollars anyway. Then you had the Korea War, the war in Korea. Again, we got involved, so that means more money needs to be spent. But then in the 60s through the 70s, when we got involved in that Vietnam War, that was such a waste of money. Things just went completely down. Then you have an oil crisis. America relies heavily on oil because in order for you to sell and buy oil, because of it being the reserve currency, you need to have dollars. So you need to have dollars to buy oil. You need to sell your oil for dollars. So when there's a crisis in oil, there's a crisis with our currency. And there was another one. I didn't even know there was a second one. So between the Vietnam War and the oil crisis and taking our dollar off the gold standard, it just made the price plummet even further, just like that. Because if we look at it, the purchasing power of 100, it's basically like $40 then, right? By the time the second oil crisis happened, again, another 50% drop, right? And again, we got taken off the gold standard because we could not afford any of this being on the gold standard. Which also meant, and think about if we stayed on the gold standard, we wouldn't, think about the amount of wars we would have not wasted our time with and wasted so many American lives for. I think all the time, if we had stayed on the gold standard and kept ourselves, we'd probably be like Japan, just a billion times bigger. Uh, we would be more advanced as a society. The wealth disparity wouldn't be as great. And also, if you really think about it, um, what our prevalence to just be in wars and to always interfere with other countries and their politics and their economies, it's really no wonder why violence and racism is so prevalent in this country, because like our protectors, which is what they are, the government, they're the ones in charge of keeping us safe and keeping us stable. They don't even want to do that. They make more money when we're not like that. And you can pretty much, see after this, it just gets lower, lower. It just gets worse. And it's pretty easy. That's all there is to it. $100 over 100 years ago was basically worth that. In only 100 years plus, it is down here. It's like so, like right here. It's so far down. Here we go. $100, 1913 will only be worth about $3.87 today. So basically, what they mean to say by that is, your $100, like $100 American, like now, like, is basically for back then is like $3.87. Yeah. Like if you get paid, if someone pays you $100 now, it's not the same as being paid $100 back in 1913. You're essentially like getting paid, like now it's basically you're getting paid $3.87 for what it really should be worth. So that $100 is, oh, I gotta charge my Mac. It's about to die. Hold on a second. But yeah, now think about that. Think about that. Your $100 is really worth $3.87. $3.87. And even $3.87 back then it's like worth $100 now. Like $100 then is really like a freaking $1,000 now. So that's what it is today. So when you look at this chart, you understand. You should understand that your cash isn't worth hardly anything. And the worst part about it is not only is our cash not worth anything, but our cost of living has gone up. You got a lot of these people selling houses and mostly, let's stick to the apartments and rent, because for most part, most people, it's been hard for most people to buy a house. Basically, generally for most of the time period in this history, you really have to work. No matter what era you live in, you really gotta work for it. But in past eras, though, because again, look, if your money is still worth up in these ranges, then for the most part, you get yourself a job that's full time and you work a couple years at it, you should be able to afford a house, right? You can't do that now. You basically need to strike a hard, like on a decent paying job, and even when you get the house, it's like, still, are you going to really be able to afford the property taxes? When things break down in the house, how is it going to really, like, are you going to be able to front that? And if other people, like, if you can afford a house, then you're in the minority. Most other people can't afford a house. So what's that going to do for you when you want to sell it, or you need to sell it and no one's going to buy it from you? That's a really big issue. And what was I saying? Because this is a lot of information. This is going to be a long video. Layman's. Okay. So that's what we have here. Now, this is why assets are important. You need your assets to either increase your net worth, or you need it to hedge against the dollar. Because there are a lot of assets out there that basically can keep your currency, your money, relatively stable. and we can talk about gold and silver. I think I have. Let me go back a page. Should work. Okay. So look here. This is the gold price and the U.S. dollar correlation chart. And when you look at this, layman's terms, essentially, it shows how the dollar and gold act towards each other. And basically, I don't know too. A little bit of this is like technical because I know this shows like the price of gold itself. Between a lot of these years, I'm not so sure what it means by the dollar. I'm guessing maybe let's see. Let's look what they define it as here. Interactive chart compares the daily LBMA fixed gold price with the daily closing price for the broad trade weighted U.S. dollar index. Okay, so this is basically what the dollar was. I guess what the dollar is trading for on the markets. If you do forex, then I guess you understand. You do it legit. But essentially, when you think about correlation, basically you got to think about people going into dollars out of gold. So like for example right here, more people would rather be in the cash than be in the gold. So gold and the cash like right here was looked at as a bit more valuable. And why was it? Well, if you look at the dates, this is during the time of the computer getting hot. But this is during oh boy. But if you look at this chart period, this is during the time of the 08-09 financial crisis. And we just look here. Now, after the crisis, because initially during this crisis, like just before, people still were feeling good. I think the market was really going up. But when it crashed, you can tell it's crashing right here. And then after that, for like a couple years, it was just people just completely, they took themselves right out of cash, stayed in the gold, because for the most part, I'm pretty sure they were assuming the recovery was going to take a while. But see, the thing is also, the stock market completely blew up, and it's been on an uptrend literally ever since. It's just been up and up, up. So during these times, it was just, as long as you weren't in cash, if you were in stocks, houses, anything you were in, the market was just going to be in your favor, because again, the housing market crashed during this time as well. That's what that was the main focus of that crash. And so people were getting houses for cheap as hell, and with the economy basically doing the upswing with their stimulus, prices were going back up. And you could see things were normal. Well, for these people, they were normalizing, because it got to the point where, okay, we can go back to cash because we made a whole bunch of gains. There's not a lot of fear. I look at this as like fear. Like, there's still a whole lot of fear. Everyone stay in gold. Okay, it's been a couple years. We good. We can go back to cash. And basically, the gold price is just, look, it's been dumping. Because actually, we're at higher prices than this right now, right? And at this point, this is like the peak for gold. And it just went down, and it crashed, and really went low. It went so low, it was almost below $1,000 at one point. And yeah, so we get here, it just basically stays like this. But then here's the big equalizer. You see that right there? You remember when everything started to shut down? Those shutdowns, those markets, it made people, again, gold had a bit of a dump, and people went back into cash because of, they were dumping wherever they had to get out them, they don't know what was going on. They got out the stock markets, all that. They went liquid. Now with this round of stimulus and what Corona has done, oh man, I said it. I don't care. I'm not making money off of YouTube. What the virus has done to the whole global economy, basically the dollar doesn't, it really doesn't, there's nothing that the dollar can do. Its true value is that it really has no value. It's being exposed. And we also have other methods for currency and money. It's just, if you look at here, gold is hitting its highs. It's about, just think about it. This is what's supposed to happen. This is a crash. We've had a crash, economic crisis. When that happens, people get away from the dollar. They go to gold. We are at the start. you need to think about it like right here. This is the start. This is why it's important to get into the precious metals now, because we're going to start getting away from cash. This is how it works. And let's see, when the crash happened here, it happened in a couple months, 2009 and May 2010, a whole year, 2011, 12. So just kind of look at where we're at. We're like at here at this point now, and this is within a year and 2 years. So if you look at this, you can pretty much tell gold's probably going to go up. That's what's going to happen. And remember, when gold did this last time, it was at about $900 per ounce, and it almost jumped up over almost $1,000. It went really high. But see, this is during the difference between then and now is that the money printing, the stimulus is adversely affecting everything right now, and we need much more, because these kind of shutdowns are destroying whole economies. These kind of shutdowns here hurt the economy a lot, but we were able to recover. We are not going to recover like we did that last time. And I know that was a long spiel, but gold is an asset. Silver is also an asset. And these are reasons why you should just get into gold and silver as well. Because if you also look at silver here, this is like the whole timeline chart. I'm going to just keep it at 30 years. Gold is in the blue, silver is in the yellow, so you're not confused. These are the prices that it used to have in the 90s. $5 for silver, $200 something for gold. And essentially what this chart does, this chart compares gold prices and silver prices. The nominal value to demonstrate the comparison and actual investment returns. So when you look at this, basically look at at these points, if you invested in gold and silver, what's going to get you more return on your investment, depending on when you sell and everything like that. So for the most part, gold has been a better investment to get you returns than silver. We've had certain points where things skew the other way, but especially in the recession, it was like that. But see, the Great Recession. But see, there was a point where silver. Look at that. Silver got manipulated heavily. It basically did a Bitcoin run. When Bitcoin went to $20,000, that's exactly what silver did. And if you were sold at this point, depending on these periods coming here, getting silver, you made a high return. And then, of course, it dumped. But then it didn't just dump. It dumped all the way. And gold did much better. I'm pretty sure basically what happened here, people came out their cash, they came off their silver, and they went into gold for more stability in these markets. And for the most part, silver has basically been suppressed, highly suppressed. Even though gold and silver follow each other a little bit, but silver and gold has been depressed. But now, if you look here, if you really compare the lines on this graph, like gold, of course, it's had a bit of its jump, but if you look at silver's jump here, silver has a much steeper shoot up, and it's kind of going down now. But what this also means is that silver is also prepared to go up along with gold. And there are a lot of people that do think silver is probably, we may end up having the charts go like this again as well. Because gold is still pretty expensive for the average investor, and it's really hard to stack gold. Silver right now is cheap. You can stack more silver than gold, and let's say you get 2 ounces of gold, about $3,000. But, if you get the same amount of silver, and silver gets to $100 an ounce versus gold getting to $3,000 an ounce, you're going to make more money off of silver, because I think the ratio is really skewed. I don't know what the exact numbers are, but basically silver is possibly, there's a chance it could be more valuable than gold. I personally already believe that silver is more valuable than gold in the first place. Because most of our daily applications in life, most of the things we are electronics, which make the world go round, they use copper and they mostly use silver. And my mic, my computer, my TV, all these things we need in life, your phones, your cameras, they use silver. So silver has more applications than gold. Oh man. Got through a bit of that lessons. So last thing we gotta go to, and I'll make this kind of quick, is Bitcoin. Now this is a return calculator. And when you use this, essentially, look at this. If you put $1,000 into Bitcoin around the same time this month, or this month in general, and you held it right until here, you would have made a 1,941% return, and that $1,000 would be worth $20,415. Let's go back another year. 15th, calculate $52,000. Now, I know that's a bit of an extreme example, and most people didn't know about Bitcoin, but again, Bitcoin is a revolutionary asset, and it's a great currency. It's great money. Now, this is around the time when most people got into Bitcoin. Again, now this is also a very, very tricky time because when it jumped up to $20,000, if you got in then you'd think you would still be down. But even still here, still $1,000, you still get a $1,300 gain right here. And let's see about this time 2 years ago. Still, look, you still got a gain. You're still up in your percentage points. Because Bitcoin is so young, it's so volatile that your gains, there's a lot of risk, but the percentage gains are very high because that risk is so high. But the thing about Bitcoin though is that for the most part, year to year to year to year, the lows of Bitcoin have gotten higher, like consistently. They have consistently gotten higher, which is incredible. And it's an asset that I'm glad I got into in 2018 because I know I'm up. But getting into it earlier, there's really no other asset that you could have gotten into, that you could have invested into, that would have made you the kind of gains that Bitcoin did. So now that we've gone through all of these assets, and the only reason I was on Bitcoin kind of short is because I have plenty of videos about Bitcoin at this point. Now that we've defined the assets that I believe are more valuable to cash, if you made it to this point in the video, black people, we need assets. These assets are affordable. They're more affordable than housing, and they're more affordable than like a lot of really, really big expensive stocks. I know you can get fractional shares of stocks, but still, Tesla is overvalued. The stock market's overvalued. You know, Bitcoin is undervalued. Silver is undervalued. Gold is undervalued. And I really like to preach. I like to preach those assets because for the most part, most of us can get those assets. And the returns on them are probably going to be greater. I know gold and silver are usually used to hedge, not so much as for investments, but because their price compared to dollars are going to basically explode, I do look at them as more of an investment vehicle at this point in time. And $1,000 in each of these assets are going to go a long way. And a lot of people don't have the kind of money to get a house, to get property, or to put themselves into big mutual funds. And at the same time, they don't have as much time to wait. We can get big gains with these assets in a relatively quick amount of time. That's why, even though I don't make a lot of money myself, with the money I do make, even if it's a little bit, it can just go pretty far, pretty quickly. And yeah, that's it. So that's it for this draft. I'm about to clear it up. Make this shorter.